Hey everyone, Brian Bogner and Greg Towner here with Parallel Portfolios. And do not adjust your video. You are seeing this correctly. Greg and I are actually in the same place recording this video together. And we got a lot to talk to you about, some really good stuff here as we close out 2019. So let's go ahead and get started. All right, I'm gonna get my pointer up here and let's get going. Greg, stocks have been doing tremendous here. They've been going up, and up here as we close out the year. What do you make of this move?
Yeah, we think strength is a good thing. This is a chart of all U.S. stocks, large and small. It's been trading in a sideways pattern for about 2 years, but now, even though it's up huge this year, it's actually just recently broken out to all-time highs, broke out of that big base. That's a positive in our view.
Yeah, and tell us about the international space.
Similar view. It's not an all-time high, but it's a recent high, broke out of a key base. It may or may not do better than U.S. stocks, but we think on an absolute basis, it looks really good right now.
Now, Greg, I got to ask, because we've been talking about this in our videos, but what we hear from clients and from folks right now is they're worried about the market because it's at all-time highs and it can't go any higher. But when stocks are breaking out to all-time highs or year highs, that's typically a bullish thing, right?
Yeah, we view that positively. All-time highs, strength, don't fear strength. We think it's a positive.
Okay. All right. So that being said, could we actually be, I know we've had this long run now for 10 years, but could we actually be in the middle innings of a secular bull market?
I think this would surprise some people. Everybody talks about, oh, this market's gone on too long, it can't go any longer, we haven't had a recession. Let's take a look and keep an open mind and look at this chart. This goes back to the 1920s. Each one of these red rectangles is a bearish period where the market had to find a generational low. When it finally broke out of those periods, the stock market ran in a secular bull for multiple decades.
Right.
And we broke out of our most recent one just in 2013. So we're about 6 years into the current secular bull. Now, obviously, there's no guarantee it has to go as long as the other ones did. But we think investors should stay open-minded that that is actually a real possibility, not just, oh, we've been up 10 years, we have to go down. We don't know if that's the case.
And it's really adjusting a mindset, because I think when we talk to folks, a lot of people look right here at this low in 09 and they think, hey, we've had this move for 10 years. Well, when you really think about it historically, like you're saying, it's more like maybe a 6-year move, right, out of breaking above these highs.
Exactly.
Okay.
So this next chart, we're going to look at this and then we're going to tie it in with the previous chart. So starting on the left-hand side here, each of these red columns, when they're on the upside, that means more money is flowing into bond funds than stock funds.
Okay.
And when it's on the downside, more money is flowing into stocks. So you can see here in recent years, money's been pouring into bonds,
right,
even though stocks have been doing well. Usually you think it'd be just the opposite.
Right.
So what does this mean? On the right-hand side, it tells us that historically, when that much money is flowing into bonds, it's actually positive looking out a year for U.S. stocks. They tend to outperform significantly. So we'll see if that holds, but it's an appealing thing for us looking forward.
So, I mean, just to reiterate, this amazing year that we've had in stocks also is one of the best years ever for money pouring not into stocks, but into bonds.
Yeah, there's a lot of reasons they're flowing into bonds. We'll get into that another day, but right now it's pretty amazing to us. So what we want to do is tie this into the previous chart. So on the left-hand side of this, see all that red on the bottom?
Right.
That was money pouring into stocks back in the tech bubble, back when we started in business, right?
Right.
Well, everybody was super bullish.
Right.
Now, if we show that point in this chart, that's at the very peak, right into the tech bubble. So money was pouring into stocks. Not coincidentally, that was the top of the bull secular run.
Right.
So a little brief period move up in bond flows there. That was when the correction happened in stocks. And then all that money flowed into equities there, leading into the financial crisis. All that money flowed in, people were positive. Exactly. Then you fell off, and everybody all of a sudden was flowing into bonds. Not coincidentally, that low in the market in 09 is when we saw all that money flowing into bonds.
Right.
Everybody was afraid. They were flowing into bonds.
Right.
And we move forward a little bit. Money finally came into stocks, and that is what we think in 2014-13 broke us out of that big red rectangle. Finally broke us out. So it took the equity flows to push us out. But since then, we've been seeing flows into bonds.
Right.
We think ultimately, until this secular bull is done, we're going to need to see a lot more flows on the bottom side of this chart into stocks.
Right.
It doesn't mean you won't have corrections along the way. You always have ups and downs. We've seen that 15, 20% corrections. Those don't feel good, but they're not a bear market per se.
Right. Okay. So stocks are breaking out to new highs, which again is bullish. We need to stay open-minded about, that we're actually still in not only in a secular bull market, but maybe just in the middle innings here. And again, those bond inflows, stock outflows are historically bullish. So a lot of tailwinds, and we know there's a lot of news items right now that we get a lot of questions about impeachment and trade wars and things like that. And there's always new stuff out there. There's always going to be negative headlines out there. What we want to do is look under the hood here and see what's really going on in the market. So if you guys have any questions about anything we talked about today, by all means, give us a call, shoot us an email. Thanks so much for listening, and have a great day.